Sandeep, how can we not talk about the Adani group of names? Now, over the weekend, you have Ashwath Damodaran calling the fair value for Adani Enterprises at 940, 950, thereabouts. What's your latest comment?
Yeah, I would agree with his assessment that the real values would lie around those levels. So I think there was a euphoria which has got corrected. Now, the question is whether uh, the valuation correction puts an end to this or it becomes more serious. So I think that's what investors are interested in. So it as it is did not have too much of domestic institutional holding in terms of their equities. So it doesn't impact investors in mutual funds, etc. so much. So we keep on watching the story and not doing anything.
We were just highlighting Relaxo, and I'm just looking at the numbers, and it's a little bit of a disbelief considering, the peer group, be it Metro or others or a Bata, for instance. Their numbers are yet to come, but I'm not sure about that. But quarter after quarter, they've been posting excellent growth, and here you have Relaxo, wherein it's another disastrous quarter.
Yeah, it's a very intriguing story, which is tough to understand. They were doing very well when rest of the industry was not doing well. Now, when there's a revival, of course, they are suddenly reporting such bad numbers. So I think EPS for this quarter was just 1 rupee something, and for the 9 months is around 3 rupees, something or 4 rupees. So even if we assume a 6 rupee EPS for this year, stock traded at 135 times earnings. Um, I think it will be the most expensive listed stock X of the loss-making new generation companies.
All right, Sandeep, thanks so much for joining in and sharing with us your outlook on individual stocks and the markets as a whole. Let's get those mid-cap recommendations going as well. For now, the pre-open rates flat with a mild positive bias. And Kunal, what's on your radar?
So I'll bet on the mid-cap IT name. It's buy on FSL, First Solutions. That stock has done reasonably well, trading above that 113.14 mark, also above its 200-day moving average. Very good set of volumes over the last 4 or 5 trading sessions. Cumulatively, that has improved for FSL, and that in general could lead to a strong trending breakout for the stock. 122 as a target, which I would recommend as a buy. Stop loss at 109.
Okay, first, so solution, that's the mid-cap bet coming in from Kunal. Naresh, what about you?
So that would be a buy on Mahindra and Mahindra Finance. The stock has been trying to make that breakout move about 240.45. That has been a resistance for the last few months. Also clearly an outperforming stock in the financial pack. So expecting this to break out, it almost saw a tick towards 245, 247 on Friday. The results seem to be good. So out here, any opening dip or closer to that prices of 240.45 would be a buy. Stop loss at 235 and a target price of 275.
Okay, so watch out for that earnings reaction coming in on M&M Financial. Sandeep is quite positive and Naresh is also echoing that view. But time now to get you some national and international news in our News Fatafat segment. First up, the US military said it is searching for the remnants of the suspected Chinese surveillance balloon it shot down the previous day in a dramatic spy saga that has further strained the American-Chinese relations. The US Navy is working to recover the balloon and its payload, and the Coast Guard is providing security for the operation. A successful recovery could potentially give the United States insight into China's spying capabilities. Meantime, a powerful 7.8 magnitude earthquake has hit the southeast Turkey region near the border with Syria. The tremors were also felt in Lebanon, Syria and Cyprus. Turkey reported 5 deaths in initial tally. Videos posted on social networks show destroyed buildings in several cities in the southeast of the country.
Meantime, around 10 deaths have been reported at ski resorts in Austria. The authorities had already warned of the dangers of skiing in the current weather. Back home, the Prime Minister will inaugurate the country's largest helicopter manufacturing facility in Karnataka. The facility is planned with a vision to become a one-stop solution for all helicopter requirements in the country.
And former India women's team captain Jhulan Goswami has been entrusted with the role of team mentor at the upcoming Women's Premier League season. Remember, she has a dual role to play this season, as she will be also the bowling coach for the team. And another proud India moment, biggest night for the music awards, Grammys 2023 is currently underway in LA, and Beyonce has won the best R&B song for Cuff It. With this, she ties the record for the most Grammy wins of all time. Indian composer Ricky Cage also becomes the only Indian alive to have won 3 Grammy awards. Of course, in his latest tweet, he dedicated the award to India.
Okay, so that's the top headlines as far as international and national arena is concerned. But let's talk about some of the stocks which are buzzing around in the pre-market. Vodafone Idea is up around 10%. 10%. Of course, the rates need to settle, but for now it's showing that spike. And similarly, Indus Towers is also up around 10%. Indigo is seeing a bit of a result reaction, 5% higher. M&M Financials too is seeing an uptick of around 3%, and Tata Power is also following suit. Let's take a look at the list of losers as well. Again, the rates have not settled, but the Adani group of stocks are showing a downtick of 5 to 10%. So Adani Enterprises is showing another cut of 10% to probably begin trade, and Thyrocare as well as National Fertilizer, Aarti Industries are some of the counters which might be showing a bit of a downtick. Kunal, you have been quite positive when it comes to a lot of auto companies, whether it's Tata Motors, M&M, etc. But what about the two-wheeler space? Is there any name that you would like to bet on?
So I think the only stock which actually looks very attractive is Eicher Motors from the two-wheeler pack, because Bajaj Auto, Hero MotoCorp, these stocks have grossly underperformed not just the entire two-wheeler pack, but even the entire auto pack. Now Eicher Motors was one of the first stocks. So I go back to 2022 second half when the auto stocks were making a strong comeback. M&M was one of the first ones to make a charge towards the all-time high levels, and that was a time when even Eicher Motors rallied up from 3,000 to 3,500 plus levels. In the last couple of months, the stock has gone through a wave of correction, but then again, the stock has settled back above its 200-day moving average, not fallen much, significantly below its 200 DMA. And the stock, after a correction, time-wise correction as well as a price-wise correction, is now going to a recovery phase. I think if I'm not wrong, on Thursday or Friday, the stock also managed to close above the 50-day moving average as well. So that's another point of indication that probably Eicher Motors could make a strong comeback. So out of the entire two-wheeler pack, that's the only stock which I would bet on.
Okay,
Right.
but continue to stay more positive on four-wheelers than two-wheelers.
Yes, absolutely.
All right, meantime, let's also get in a view then on the charts for some of these other counters that will be in the spotlight, largely on the back of numbers coming out post-market hours. And Naresh, run us through your views on Sun TV, which came out with its numbers. It's been pretty flat in terms of the PAT performance as well as revenues. And you've also got something like an Affle India, which has seen a pretty healthy set of quarterly earnings.
So Sun TV is something which is almost trendless. The stock has been around 400 on the lower end and 520 on the upper end for the last almost 2.5 years. So very difficult to take a call. The stock does not see any momentum on either side. So it is something which just goes off the radar. So no views on it. Affle India, on the other hand, seems to be trying to form a bottom around that 1,000 mark. But till the time it is not about 1200, the momentum is still not great. So out here I would expect a range bound move wherein 1200, 1250 could be a major resistance. So any bounce back to that area should be used to get out of the stock. Overall, the stock is in a sideways trend for the last many months.
Okay, those are a couple of buzzing stocks in trade. While, of course, we're getting set for the market open, let's just quickly revisit what the trade setup for this morning is looking like. While, of course, the Friday recovery played out, but in the last week alone and the budget week, the FIIs have been sellers to the tune of about $2.1 billion. And their selling spree clearly continues from pretty much the start of the year up until now. The pre-open rates are once again indicating a very, very quiet start. What's intriguing to note is what's happening in the currency market. The fact that the rupee has weakened by about almost 0.7%, 80 to 41 is where the rupee is. Of course, this week you've got the RBI policy as well, remember, and a whole host of other data points from across the globe. A lot of important data actually coming out from China as well, which I guess the world is going to be monitoring and will have a bearing on how the emerging markets are perceived from here onwards, and especially India, clearly. So all that are the factors to look out for. Still in the thick of earnings, a lot of them awaited, a lot of them already out. Let's see what ITC and SBI are up to, the big boys, which came out with their numbers post-market hours on Friday. ITC has jumped up now all the way to $380, and SBI as well is seeing a big move in excess of 2.5%. 558 is where that stock is currently. While we are at it, I definitely want to check in on what the Adani Group names as well are up to. Nowadays, actually, more than any other trigger, it's they who are having a big bearing on the market sentiment and the overall market move. Adani Enterprises starts off a little somber in trade, but that's okay. Less than 0.5% is the kind of dip. Given how vicious last week has been, this is something we can totally deal with. Adani Port starts off flat. Transmission, though, still lower by about 10% as we speak right now. So these are a couple of important ones to look out for. Of course, M&M Finance, we were just chatting with Sandeep Sabharwal about this, came out with its numbers on Friday post-market hours, and the results are above estimates. The gross NPA ratio has come in lowest in about 15 quarters. M&M Finance is the stock to look out for because that in the pre-open rates itself has gapped up by nearly about 4% as we speak. And then, of course, you have Marico, you have Interglobe Aviation, Tata Power, all good set of numbers post-market hours on Friday. So that's something we're going to be looking out for. But Avan, what's the index call?
Yes, let's find that out. And by the way, the rupee as well is seeing quite a bit of weakness versus the US dollar, now quoting at a level of 82.39. Do remember, you do have the dollar index and the treasury yields, which have seen quite a spike after you had the jobs data came in worse than what the economists had expected. Still awaiting clarity with respect to the comments from the US Fed. And then, of course, we do have the monetary policy. So let's get those index calls going, and then I'll get Kunal's view quickly on the currency. So here's what our chartists are advising going into trade this morning. It's a whole call. That seems to be what the view is tilting towards when it comes to the index. This, remember, after we've wrapped up what can be described as a very choppy week gone by, although you did see that outperformance when it came to the frontliners versus the broader markets. A solitary buy call, but still the consensus is a hold recommendation on the Nifty. Let's find out what the view is when it comes to the Nifty Bank Index as well. And this morning, it continues to remain a hold call, although Akush Bora has a buy recommendation on the Nifty Bank Index. It is the Moodometer suggesting a hold call on the Nifty Bank Index. All right, let's get in that take then, Kunal. On the currency, what is it that you're foreseeing?
Well, I think broadly the rupee is still trading between 82.5 to 81.5. I think the last time the rupee had hit those higher levels of 81 or just around that 81.2 odd levels. From there, it's seen a correction back again. 18.5 is where it's setting into a range. So I think broadly it's into this 1.5 odd rupee trading range. There are no signs of in fact, the indicators for the rupee is actually going to a weaker mode, and that could probably play pretty well in terms of rupee appreciating. So I think sooner or later, if we don't see any major spike in terms of the indicators, and the rupee doesn't break that 82.8 levels on the upside, then I believe that there could be a high chance that we may settle back below that 82 mark. So possibly 81.5 odd levels is what I would expect for the rupee.
Okay, that's the take coming in on the currency. Sharply weaker right now. 57 paise has been the move on the rupee. 82.40 is where it is. Of course, you've got the Monetary Policy Committee outcome as well midweek on Wednesday. So let's see what they have in store for us. Right now, of course, we're going to bask in the glory of some very good earnings, be it an SPI, be it an ITC, M&M Finance, Marico, Interglobe Aviation, Tata Power, or for that matter, even Paytm, surprising as it may be. But the EBITDA has come in at 31 crore rupees versus the EBITDA loss of almost about 393 crore rupees that they posted on a year-on-year basis. The net loss as well has declined. Paytm has gapped up 6% in just the pre-open rates alone. But 1 minute left to go before we kickstart the day for trading, and we are definitely coming out of a hugely volatile week. Remember, after the massive swings and gyrations that you had, that 18,000 plus level almost on the budget day, and then from the fall thereafter in that, or for that matter how the week even started, from there we managed to finally gain about 1.5% in Friday's session alone. FMCG, IT, banks, they were the best performing sectors, and of course intense volatility really marred both the mood as well as the moves for the market within the Adani groups. FIIs, by the way, in last week alone have offloaded about $2.1 billion worth of Indian equities, and this, by the way, has been the third week consecutive week of inflows into debt as an asset class vis-a-vis what's been happening into the equity markets. But anyway, hoping for some green and some sustained green, although the pre-open rates are indicating just a very, very quiet, sluggish sort of start. Let's see which way trade heads from here. So there you go, the opening bell. The Nifty has started off at 17,800 thereabouts. Tempered a move for the Sensex as well. Let's talk about the big movers then, and let's bring up SBI first of all on your screens. Considering they've reported the highest ever quarterly profit, the management is saying that ROA is going to remain in excess of 1% in the very near term. 1% higher for SBI. ITC, the cigarette volumes growth has been above what the street was anticipating, and the results both for the paper as well as the hotel segment as well have been above the street estimates. ITC starts off at 385 almost. Yeah, 385 is here on the ticker right now for ITC. M&M Finance as well. Great set of numbers actually. The gross NPA ratio has come in lowest in about 15 quarters. Marico too has managed to beat the street estimates in terms of their earnings. M&M Finance, of course, starts off with a move of 3% higher. Marico up 1.25%. There's Interglobe Aviation. I mean, we talk about as to how busy the airports has been. This is purely the monopoly within the listed universe. Interglobe Aviation, great quarterly numbers. Though the stock is a little bit tempered, only 1% higher as we speak. Tata Power, the numbers again are above estimates. The margins have shown an uptick of nearly 160 basis points. It's actually Paytm, which is the turnaround story. The EBITDA coming in at 31 crore rupees versus the EBITDA loss of 393 crore rupees. That's the big turnaround story. This quarter at least 7% higher on Paytm as we speak right now. There's also Army Organics, which has posted good set of numbers. Reliance, the government has hiked the windfall tax on crude to now 5,550 rupees per ton. I'm not sure if this is the most positive news flow on Reliance Industries. There's JK Cement, Manappuram Finance, RT Industries, Sun TV, Thyrocare Technologies, Intellect Design, Subex. These are all some disappointing set of earnings. Sun TV, those starts off just marginally higher, 0.5% uptick. 448 is where that stock is right now. But Kunal, what are the first rates indicating? Let's not talk about the index because the index is not doing anything, any sector or stock that you're picking up as a trend.
So as some of the names which you mentioned, like for example, M&M Finance, ITC, the results-based price action is getting better. So, we are now moving on from a market where the action was that if the results are quite positive, we are actually seeing profit booking into the stocks. We are not moving out from we are moving out from that zone to now reacting positively for stocks which are delivering good results. So that's a sign of positivity coming back into the markets broadly. One of the stock which I would probably be more bullish on from a recovery phase would be Bajaj Finance, and that's the opening trade which I would recommend at current levels. The stock holding on to that 6,000 mark, I believe, and the recovery with the stock had shown on Friday indicates that there could be more in line of strong performance for the stock in the near term.
All right, Naresh, let's get in your top first trade.
So looking at Piramal Enterprises, the stock has now started making a recovery in a strong way, made almost 3 bottoms around 800. Expecting this to slowly go towards the 920 mark.
All right, that's the view coming in. Those are the first trades that our chartists are advocating this morning. Just checking in on the index right now, 17,791. That's where we're currently at. All right, Samir Arora, founder and fund manager at Helios Capital, is joining in on the show right now. Samir, hi there. Lots to talk about. We have Adani, the big budget that went by. I think that was pretty much unexpected lines, and the fact that FIIs have been relentless net sellers. What is it that you want to start off talking with?
I want to start by saying that today we want the market to be up because we want to show to the FII that this move from India to China makes limited sense, and maybe it is already over. And today Hong Kong is down 2.5%. So if we can be up flat, 0 plus minus, we would have outperformed in one day, enough for a week kind of numbers. I think this trade that people were selling India to go to China looked ridiculous in January itself. I mean, you're most welcome to put new money into China or do whatever. But to think that after a 40-50% move in the index in China, now somebody is selling India to buy China as an opening up of China trade, or they've been upset with India, I think it was laughable.
Sorry, I wanted to get in your view then on, the kind of rout and market cap erosion that we've seen with the Adani group of stocks. Incidentally, you had Ashwath Damodaran talking about how he values the Adani Enterprises stock at 947 rupees per share. What's been your takeaway and your view on what's really transpired here?
So first, my view is that Ashwath Damodaran analysis doesn't make any sense. I mean, doesn't make any sense means I don't care about the price, but coming after the correction and then saying it should be, who cares? If he had said it when it was 4,000, there would have been some value to it. But anyway, in a big picture sense, every FII and mutual fund broadly knew that 3-4 of these Adani group stocks were valued very highly, and that is why nobody was buying them or touching them. And mostly the FII stroke mutual fund crowd was in Adani Port, and then when this Ambuja deal happened. So it was clear to everybody that those stocks were very high valuation and therefore people were not in it. So in some sense, if there is a big correction there, in theory, unless you say that the project is therefore threatened and as if the whole thing, the lenders were looking at the stock price, in theory, it is a good sort of feedback, you can say, from Mr. Market to the promoters that don't be so aggressive in your plans, in your this thing, and don't take too much leverage. And market keeps giving these lessons to everybody. Few days ago, they gave this lesson to Paytm, and before that to Zomato. So I don't think it is bad if the corporates learn from what the market says, that don't overdo anything. It's okay.
I think the market has overdone what's happening with the Adani group of names, Samir.
For those 4 companies, I don't think they overdone, but we never really looked at them because they went up so fast in such a short period of time, and there was so much capex type big numbers which put off investors in general, that if you are saying my investment is 3 billion, 5 billion, and in one case it was 50 billion. So those kind of things are scary for the old school kind of guys. But Adani Port and Ambuja and all looked fair all the time. So that's why they had 30% institutional or whatever outside ownership. So I don't know that, but I am convinced that nobody is going to not be able to pay their debt, that the assets are real, and maybe the equity pricing was not real for some of those companies, or were not palatable to many investors, including us.
Fair point. You gave me the next cue, Sandeep. Paytm, first ever quarterly positive cash EBITDA, and much ahead than what the market was anticipating. You're invested in it, aren't you?
Yes. We bought recently, only about 2 months ago, 1 month ago. And I didn't think that they'll break even now, because I saw Vijay Shekhar's interview in Davos, where he was saying that we will break even ahead of the indication to the market, which was September. So I thought maybe 2 quarters ahead, which means March quarter. But to have broken even in the December quarter is good. So again, everything has a price, and it doesn't mean that we are expecting that it should go back to the IPO price. But at 500 odd and Zomato at 50 odd look okay to us for the way we play the market, which is to buy 20 odd stocks of 2% each and hope that a larger number do well than not.
Okay, so that's the take coming in as far as the Adani group of stocks as well as the new age tech companies are concerned. Samir, what about the entire banking space? Because you have equal weight when it comes to HDFC Bank, ICICI Bank, SBI, etc. And you're also positive on Axis Bank, IDFC First Bank. So quite a big portfolio when it comes to the financials, if I have it right. Correct me if I'm wrong, and overall take where you're seeing value there.
No, so therefore we have these 2 groups. One group which is 50% of the portfolio, which is these well-known regular stocks, in which IDFC first we put in the second group of these 2.5% type weight, but the others in the first group. So half is these stable, consistently growing stocks, and half is these things that we try with 2% each. Yeah, so we have all the 3, and therefore we have looked at the Adani issue also more carefully than normal. It was not enough to say we don't own. because we have to worry about whether it will make an impact on the banks, and we are absolutely convinced that there is no negative fallout on anybody. And as I said, I think in the end, even for the Adani group, in the end, it's a good lesson to have been, message to been given while you are still growing, rather than putting all the money and then this lesson being given in some sense. So overall, I think it's good. And as I said, I am totally against this idea that FIIs are selling India to go somewhere else. You can put less money, you can put more in some other market, but at a time when China was doing well and US was doing well, for us to be down was a bit too much. Regarding the banks, we like the banking sector. Everybody knows why everybody likes the banking sector. And so the only issue then was, is it overowned? Is it consensus and stuff like that? Now, those things work for some time, but if the company's results continue to be good, then these things don't matter. So, for example, my favorite there is that for 20 odd years, HDFC Bank gave 20, 30, whatever percent returns to the market. And everybody knew 10 years ago also that HDFC Bank is good. And from 2014, it was at foreign ownership limit, which means at that time, everybody knew that it is a favorite stock, and still from 14 to 19, it would have outperformed everything. So just because everybody knows, everybody has it, is not enough, except in some situation where suddenly you have big selling or buying of the market, which means more buying of that share which everybody may have. But even for, we have gone through that phase also now, where the foreigners have sold the financials last year and whatever they've done in the first month of this year. So even better for the banks, where there might be lighter ownership of the foreigner, and they are still doing and will continue to do well.
Do the public sector banking names make the cut as of now? You're still in the avoid zone when it comes to the public sector banking names, apart from SBI.
No, one is enough for us. We are satisfied kids.
Samir,
and anyway, after a 75% move, which we were not there, now we are not going and joining that.
On the 1st of Feb, you actually tweeted, why are you looking at Twitter? Concentrate on the budget. What were you concentrating on, Twitter or the budget, and what were your key takeaways?
Actually, I was looking at the budget. Last year, I missed the budget. By the way, before that, I must say this one line. I just heard you say that the US market fell because the unemployment numbers were worse than what the economists thought. They were so much better, which is what they consider worse these days. This world is totally twisted, where better numbers are considered bad for the market. So on the budget day, the budget looked good. But, immediately before or after that, the Adani issue sort of cast its gloom and doom and darkness on it. So I think that also over time will play out. But it was not that there was a massive, the budget could have led itself to a 5% rally. It would not have led. But it would have sustained the thing in terms of no negative being the first thing that we want from a budget. And then a few positives in literally every area, from fiscal deficit to capex, focus on capex, to a little bit of tax reduction, to taking a visibly tough thing of reducing the tax for the highest bracket and stuff like that. So in all sense, it was good.
Sandeep, I bet ITC quarter after quarter must be making you quite happy, Samir, considering you were one of the first ones to catch on to ITC, if I'm not mistaken.
ITC we got on. So, that's what our thing is, because we buy 20 stocks, many stocks we catch early, but the model is that you should catch more than just the normal ratio that anybody in the market would catch. But yes, ITC has been very satisfying. Now, one day we'll have to see what to do, but right now it is like more than double, I guess, for us, or somewhere near. No, maybe less than that, maybe 80%. But whatever it is good in these days to catch some of these things early.
So, Samir, going by the ITC precedent, would you be tempted to add more to Paytm perhaps right now?
Paytm, we have reasonable, our range is 2 to 3%, and when stocks do well, we will add more to it. So we've done it to many stocks. We did it to IndusInd Bank, we did it to IDFC first. Last year we had Varun Beverages and Lemon Tree and all those which did well. But when going in, you broadly don't know why suddenly some of them will go up so much. As in, who would have thought that IT is supposed to go up 80% or 220, 30, whatever was the price then. And then that Varun has to double and Lemon Tree will go up 75%. But on the other side, we always get one or two of these which fall 20-30%. Like last year, it was Piramal and Quest. As long as the ratio is there, it works out. Never get carried away.
Carried away, it's difficult in this kind of market when there is a 100-point downtick just 15 minutes into the trading session, 300-point cut when it comes to the Sensex. So the broader market is doing much better. And there are a lot of result reactions actually which are seeing a lot of action. But Samir, as far as your top bets are concerned, apart from financials, apart from the new age tech companies, which is the area of interest at this point of time? Is it industrials, going back to the old school, let's say the L&T, Tata Power, etc. of the world, or keeping it bifurcated? Where's the focus these days?
We don't invest like that. No, so our top bets are not like 10%. We have one group of average 5% in 10 names, and then there's a group of 20-25 names of 2-2.5%. So total in the 35 names, any one name, new name is not going to change my life, but as a group they have changed my life over time. So therefore, we even if we look at one of these new stocks, then we'll have to find 2.5% somewhere to sell. So therefore, all the time you are open except for some big picture things that we don't like. Like mostly we don't like state-owned and stuff like that, or commodities. But once in a while, if our analyst says that buy this particular one because it is not to be defined by its label, that it is more than a commodity or it's more than just being a state-owned company which is cheap, then we don't mind. But we don't have right now anything that we are looking for. We are fully invested in some sense, you can say, and then to buy something, you have to sell something.
And the take on consumption, is that what interests you? Because Indigo came out with a very good set of numbers. ITC you already spoke about. Hotel stocks have been doing well. Anything that you are nibbling when it comes to the opening up theme, etc.? Or no longer an opening up theme, but the entire basket?
No, so we have many consumer companies from Westlife, which is McDonald's, to Campus. Let's hope that Campus's results are better than its competitor, which came out this weekend. And then we have the hotels, and then we have Titan. So here and there we'll have many of these 3% type numbers, yeah. Because as I said, we play as a group.
What is your view then, Samir, on the entire defensive, defense space, the railway capex theme, capital goods as a space, owing to the kind of capex thrust as well that was announced in the budget?
So we own Bharat Electronics, and the idea that we figured out, because we are simple people with simple brains, is that if you're looking at defense and you look at what is Air Force buying, what is Navy buying, that means somebody is buying fighter jets, somebody is buying submarines, all that is too complicated, because in the budget also you have these orders coming very on and off, and sometimes those orders can be big. But electronics is used everywhere, whether you are making submarines or you are making planes. And in general, even in this budget, if you saw, the overall defense budget was not high, but it was okay for electronics in general. So therefore, we have Bharat Electronics, which is now, because it has done well, is maybe 3.5% or something, which is enough for us. So we are not buying another defense company. In terms of other capex, capital good, infra type companies, capital goods, we could have had something, but we don't have much. We just say that maybe our banks will take care of all these things. But infra, where government is a customer and you are bidding, or they are making roads or making bridges or making highways, all those we will never buy.
Okay, so keeping it simple, thanks very much, Samir. And yes, stand corrected. You had the US economy adding more than 2.5 times the number of jobs than had been expected. So, yeah, that was a bit of a mistake on my end. But okay, let's move right on then. A quick check-in on the markets. It's absolutely flat when it comes to the mid and the small caps. And for the index now, we're down about 0.6%. Names like Industars, Zydus Life, Marico, Biocon, Jubilant Food, Aurobindo Pharma and ICICI Pru, they're active in trade. The Adani group of stocks are seeing some selling pressure. Piramal Enterprises, Eicher Motors and even JSW and Tata Steel, they're looking a little bit choppy in today's trade. But time to move right on then, and it's been a pretty healthy quarter when it comes to Tata Power. Let's understand which businesses have led that growth, what is the outlook in terms of monetizing their mines, and lots more with Praveer Sinha. He's the CEO and MD at Tata Power. Thank you so much for taking time out and joining in. To begin with, Mr. Sinha, let's talk about the vertical that led your profitability. That's been the mining business. Walk us through what really has led to this growth and what your projections are.
Good morning. Thank you for having me on the show. I think you need to look at this quarter performance as a very consistent performance of Tata Power. This is the 13th consecutive quarter in which we have shown growth in our PAT. Also, in this year, if you see, our performance has been very consistent. Our PAT in this quarter has grown by 90%, but so also if you see YTD in last 3 quarters put together, it's about 90%. So I think when we look at Tata Power, we need to see from the lens that how consistently it is performing, and the growth drivers, of course, has been all our businesses. Our renewable businesses have done very well. Our existing generation business have done very well. All our generating plants, including the Mundra plant, has done well. And fortunately, we got a order under which the CRC has allowed pass-through of cost of coal for Mundra, and that has also helped us in making it cost reflective. Similarly, our distribution business, Odisha distribution, and our existing distributions continue to perform well. So I think consistency in performance is now becoming a hallmark of Tata Power. And when we look at Tata Power, how in future it will have growth in renewable, it will have growth in our distribution business, it will have growth in new businesses like EV charging and some of the energy management services that we would be doing, and the consistent performance from our existing cash cows, which is our existing coal and hydro business. And we do expect that this trend will continue in future too.
Mr. Sinha, given that profitability improved in the Indonesian coal business especially, and I was looking at the numbers, almost 53.5% on a year-on-year basis, clearly it's the high coal prices also which led to that. Going forward, how do you anticipate coal prices to move?
I agree with you that Indonesian coal mines have done very well, and we expect the coal prices, which went up to $300 in HPA, will come down in next 1 year to 18 months. So we expect it to come down to a level of about $200 to $220. So I think it will stabilize, but it is definitely not coming down to $100, which it used to be there before COVID. So I think the impact of the war and COVID and the additional demand of coal, which has been seen globally, including in China and India, I think will continue to ensure that the Indonesian mine is able to generate good amount of profit.
Your renewable energy capacity also increased to 6.1 gigawatt in the third quarter, with an installed capacity of 3.9 as well as 2.2 under various stages of implementation, as I understand it. Tell us a little bit about the timeline of the commissioning of the 2.2 gigawatt capacity, and when will it really come on board?
So all of them will get commissioned in next 3 months to next 12 to 15 months. As you would be aware, that some of these projects got delayed because of the very high commodity prices in last 1 year. Now that the prices have come down in at least in last 3 to 4 months, we expect to complete these projects in the next financial year, and very little of it will spill over to 25. So I think the benefit of all these new generation capacities will start, the fully impact one will start seeing from FY25 onwards.
FY25 onwards is when we'll see the impact of the renewable capacity. But I wanted to come back to the point that you made in your first answer regarding Mundra power plant. While you did say that the resolution is expected soon, but for now the Section 11 hasn't been extended, plus the supplementary PPA with GUVNL hasn't been signed as yet. When do you expect it to be signed, and what will be the impact on profitability and under recoveries when it does happen?
So I think the CRC order is a good benchmark for us to go ahead and sign the supplementary PPA with the procurers, including Gujarat. And we are discussing with them, and hopefully this should get signed within this quarter. We expect that this will become the new benchmark for how Mundra tariff will be determined. Of course, we are expecting that there will be huge increase in consumption in the coming summer months. And while the Section 11 order might come by the end of this month, we expect that our resolution will happen with Gujarat and the other procurers before that.
Okay, expecting Section 11 order maybe in a month's time, and maybe the supplementary PPA in this quarter. Let's see whether that happens or not. But Mr. Sinha, Odisha Discom has also seen quite a bit of improvement when it comes to the AT&C losses, but they're still high at 26% versus your own average, what we have seen in Delhi and other regions as well. Could you talk to us about what the AT&C losses could be over the next 12 months? Because we do have an idea of the long-term target, but immediately for the 12 months. And is there any other discom that is coming up for privatization that you'd like to bid for?
So Odisha Discom has been a great success because from a loss of about 35-36% when we took over nearly 2 years back, it has come to a level of about 20 to 22%, which has been a substantial improvement than what it was earlier. A lot of data cleaning has been done, and a lot of metering has been done where the meters were not working. So I think the whole impact of it we will start seeing in the next financial year. FY24 should be a great year for Odisha Discom, and we do expect that in all the discoms the losses will come down much lower than 20%, and we have a trajectory to bring down to nearly 10% in next 5 to 7 years. So I think we are very aggressive in terms of improving the performance of Odisha Discom, and the last 2 years trend shows that we can make a substantial difference in reduction of losses, as also in improving the quality of service that we provide to the consumers.
Okay. Now, I just wanted to understand that while your net debt has remained stable, the cost of borrowings has increased on a year-on-year basis to 7.2% versus 6.4%. So how are you expecting your net debt and your cost of borrowings to shape up?
So the cost of borrowing has increased, but if you see compared to other peers and others in the market, it's much lesser than all of them. And we continue to have a very close watch to ensure that our debt numbers per se remains low, plus our working capital improves, whereby we are able to generate enough cash in the business for the new capex. So I think we are very focused that all the money which is there in the market, we should collect. There has been very good trend in last few months where consequent to Government of India notification and putting the details on property portal, we have been able to get a lot of money from the discoms which were earlier stuck up, and our collection cycle has improved tremendously. So I think you will see a lot of improvement in our collection cycle in the future quarters, and we do expect that we'll be able to increase our capex, but still not increase to that extent the debt of the company.
Lastly, the street was expecting a lot of dole-outs for solar manufacturing in this time's budget, but there wasn't anything specific that came out. What does it do to your plans of the extended module and cell capacity?
So our work on the new plant is progressing very well. The construction activity is at full swing and all the equipments have been ordered. We expect the rollout of the first of the modules from this plant by this year, August, September, and the cell by December. So I think we are very much on track. The government had, of course, announced the PLI scheme last year in the budget. The rollout of that has still not happened, but notwithstanding that, we are going ahead with the implementation of the project. And as and when the PLI scheme gets implemented, we expect that some of the benefit will be received by us also.
Okay, good to hear that. Mr. Sinha, as always, great having you today on ET Now and chatting with us.
Thank you very much.
Okay, that's the word coming in from Tata Power, extremely bullish and about the future prospects. Tata Power now holding up 1.6% higher, 208 is where the stock is. We'll take a very quick break. The market, of course, getting a little bit volatile. Let me just refresh the rates and show you where the Nifty is currently at, because it continues to be quiet, but we're slowly inching lower, although seen a bit of a recovery from that previous low. 109 points lower now for the Nifty future. 17,793 is where we're currently at. Adani Group names continue to be under pressure, as is the market breadth. We'll take a break, but come right back. Our focus on earnings continues. We'll have the CFO and Director Resources at Praj Industries, Sachin Raul, join in on the other side. Getting it a little wobbly for the markets. What looked like a quiet start, we're now down almost 0.5% or so. In fact, it's very choppy, but in a narrow band so far, at least. About 6/10 to about a 1% move from the session high to the low. Idea, that's the one that is your big mover today. That's holding up 15% in trade. Indus Tower giving it company with a 12% move. And look at M&M Finance, came out with a blowout set of numbers post markets on Friday. M&M Finance is now holding up nearly 10% on the futures. That's the big mover for the day. Aarti Industries, we were just chatting with the management, 4.25% higher. And then there is Zydus Life as well, which is looking extremely smart in trade. Not a great day still for Piramal Enterprises, for Dani Enterprises, which is down 5%. LIC Housing, Manappuram, wherein the earnings were disappointing rather, and MCX as well, which is currently lower by about 6%. But Praj Industries, that's the one in focus. Sachin Raole, CFO and Director Resources at Praj, joins in on the show right now. Sachin, great to have you on the show. You reported a strong revenue growth this quarter, strong execution of the order book, I guess. But the order intake has been declining over the last few quarters, Sachin. Do you expect the order intake trend to reverse anytime soon?
Hello, good morning to you and your viewers. Yes, the order book has shown some kind of a decline as compared to the last quarter, but that's not an indication what is going to happen in future, because order closure in case of project companies definitely takes some kind of a time, and that's what is reflected. I don't see this is an indication what is going to happen going in future from the order booking point of view.
We also have the big event lined up today when Prime Minister Modi is all set to launch the E20 fuel, a blend of 20% ethanol with petrol today. In fact, the 20% ethanol blended fuel will be available at select outlets soon as well. Given the fact that we have been much ahead with respect to the blending targets, when do you see this 20% target being met?
So if you know that the target actually is advanced from 2030 to 2025, and we are actually running ahead of the capacity creation for ABP 20. And as you rightly said, Honorable Prime Minister is going to announce this E20 blended petrol to be available very soon. So it is becoming a reality that petrol will be available with a blended ethanol of 20% very soon.
All right, good to know. Wanted to also understand that, given the industry dynamics do look rather lucrative and fairly promising, what is the game plan now in terms of your growth drivers? What are your capex plans down the line?
Oh, we have actually lined up a huge capex plan for the coming year, because we are seeing the capacity creation which is required for our other businesses, mainly on the engineering side. We need to put up at least 3 to 4 times of our existing capacity in the new factory space, which is going to happen in the next 12 to 15 months. The total capex outlay we are estimating around 100 crores, which will be spent in a period of 12 to 15 months. This will create a completely new facility to cater to the engineering businesses, where we see a good traction coming up on the backdrop of whatever is happening in the energy transition and climate action. So we see a good traction coming up on that side of a business. If you look at ethanol business or the bioenergy business, and it has two segments. One is on the ethanol, that is a liquid fuel, and CBG, that is compressed biogas, as the gaseous fuel. We see the business actually doing well in both the segments going forward. There is always a concern on the EBP 20 coming up a little early of its target, what will happen beyond that, but we see a good amount of traction still remaining in the ethanol space going forward also after meeting the EBP 20 target of 2025. So all in all, we see a good prospects for all our businesses going forward.
Right. Also wanted to talk about, sugar exports, which for the season have been capped at 6 million ton till about May 2023, as I understand. Considering how the season has panned out so far, how much of an increase in export cap do you expect for the season 22 to 23?
I don't see any increase in the exports because if you look at the ethanol demand in the country is so high. And if you have heard about the sugar industry's commentary on this line, they are more than happy to have diversion to ethanol than to get sugar produced and getting it exported. Indirectly, it helps from the country's point of view because then there is no subsidization of export of sugar in that sense. And it helps us to have a green fuel availability in the country. So maybe it will remain in a range of 6 million from the exports point of view, not going beyond that. But it depends how the availability of sugar or how the availability of the feedstock available for the sugar production.
Point taken, but let's come back to your business. If I have it right, the domestic market share that you earlier commanded was close to 65%. What is it at currently? And with respect to the export demand as well, there were some further orders and ramp up that was expected, especially in Canada and Mexico. How are things trending when it comes to the export side?
Okay, in the domestic market, we have bit changed our strategy. We are right now looking at how to expand our margin trajectory instead of increasing only on the volume game. So we are very choosy at this point of time what kind of orders we are intaking, and that's what is also getting reflected to so-called from the market share point of view. Our market share is somewhere around 50% in the domestic market, and I think going forward, our endeavor is not going to look at market share, but look at how the margin is expanding from the profitability point of view. On the export side, sorry, your question was related to export. On the export side, yes, we have already put up a plant in Canada, and we see the demand for ethanol because of the low carbon intensity is coming up from the Americas market going forward.
Sure, point taken. But Sachin, since you're saying that you're going to focus more on margins and profitability, what's the targeted margin then? Because it's close to 10% now. Are we likely to see double digit 12 to 13% soon?
So yes, our objective or target is to be in the double digit margin kind of a range going forward.
And given that the late rainfall in UP has led to excess sugar inventory in the country, that seems to be limiting the upside on domestic sugar prices. Just want to understand what your outlook is on sugar prices. Do you expect them to remain steady going forward?
I will not be the right person to predict or comment on the sugar prices, but looking at overall availability of the sugarcane from the country point of view, I think it should remain in a range bound. It should not have any adverse effect on the sugar prices.
Okay, so that's the point taken as far as that is concerned, in terms of the sugar prices. But you were also diversifying into wastewater treatment, critical process equipment, as well as high purity business. Can you talk to us about how are things moving as far as these segments are concerned?
Yeah, so engineering business, as I earlier mentioned, is expanding very well, and it is progressing the way in which we had planned. Rather, we were working on this engineering segment since last 2-3 years, very, very strategically. We wanted to get this business to come up to the level of bioenergy going forward. We are also trying to integrate, especially the critical equipment business, integrated with our energy transition and climate action agenda. The modularization program which we are running is now not only going to be servicing the oil and gas and the CNG kind of a business, but it will also be serving our business especially from the modularization point of view, where we will be blending modularization for our offering in the second generation ethanol and the SAF offering. All in all, I think the engineering business going forward is going to show a great promise, and it is going to be a very big balancing kind of a business from the bioenergy side for us.
Appreciate your time. Thank you so much for joining in and giving us an outlook on your overall earnings as well as how you're looking at your capex plans down the line. That's Praj Industries for you. Just a quick check-in because that recovery in the broader markets is now evident even within the frontliners. Now we're still quoting down by about 0.5% or so. And in terms of individual sectors as well, you do have support that's coming in from quarters like the media space as well as PSU banks and the Nifty bank to a certain extent. Metals, energy, auto, they continue to lag in today's trade.